Good morning, future world changers, industry disruptors, and leaders. My name is Cades. I am the AVP for online business here in my trade. Welcome to this webinar breakout session. Before we get started, I would like to get to know you better. Coming from the high of highs kanina sa plenary session, I would like to ask you guys for your schools and your courses. Kindly type it in our VFairs chat box right here or here. I'll be waiting for your responses. So before we start, I would like to just share with you that I am a graduate of UP Diliman. And I'm also a graduate of Philippine Christian University. That's where I got my master's degree in business administration. So while I'm waiting for your responses, that's what I'll be sharing with you. Now, let me check if I'm receiving responses here. But I have here mga good morning. Good morning from Sofia Cruz, Leonard Abelar, Joey Alfonso. Hello, hello. If you can tell me your schools and what are your courses that you're taking up right now, that would be great. Pero kanina in the plenary session, I saw that there were a lot of students representing University of Santo Tomas. Here I have Lyceum of the Philippines, University of Manila. I saw another student from a university in Mindanao and then another one in Visayas. So it's great that we are well represented in this webinar session, Luzon, Visayas, and Mindanao. And when I was listening to the plenary session earlier, I really resonated with Robbie because when he said na we're actually really very jealous of you because at this early age in your life, you're actually interested in bettering your personal finance and managing your money. So you're very lucky to be part of an event like this and to skip school to better your tomorrow. All right, so let me start sharing my screen. Okay, so this webinar session's topic is stock investing for the next economical generation. So I divided this talk into 3 themes. First is actual adulting. So I will be sharing with you my expectations versus the reality that I met when I got into the workforce. And then second is the stock market in a nutshell. So I'll give you a bird's eye view of what the stock market is all about and what's in it for you. And then lastly, I'll talk about how to choose the right partner. Ideally, this is designed for choosing your first broker, but it can maybe also apply for choosing your first love life. But that's for later. Stay tuned for that. We'll first talk about actual adulting. All right. So when I graduated, I thought all I needed to do was to work hard so that I can earn a lot of income. And that income will fund the things that I deserve, which will then help me get to financial freedom. When I satisfy myself, I'm doing everything that I can, I'll be financially free. But in reality, adulting is actually working hard, but the income that you get is just enough to fund the things that you want. And for me, nobody really prepared me for the responsibilities that come from being an adult. And as an adult, these responsibilities, they come in the form of bills. And these bills, they come regularly every month. There's a set interval for that. And with the bills, sometimes when I try to be responsible and I pay them off one by one, I tend to actually reward myself. Every time I pay off, say, my telephone bill or my electricity bill or my rent, I say, okay, I deserve this I deserve this iced coffee. I deserve this milk tea. And it's really a habit that I developed. And eventually, what that did for me was my things that I deserve bucket got so big that I had to resort to utang because my income wasn't enough to meet everything that I needed. And what happened was I resorted to utang because I did not have any savings. But during that time, I wasn't really worried kasi in my head, I thought I have a stable job. So all I needed to do is to work hard again and continue the cycle. Work hard, get the income, things that I deserve, responsibility, utang, and then I work hard again. But there was a time in my life after 2 to 3 years of being in this cycle, I got tired. I got tired of living in the financial edge, just being one paycheck away from being broke. So I said to myself, this is not the life that I want to be living in. And I decided to dive in deep and check what am I doing with my finances that's not working. And of course, on my own, I'll be able to answer that. It's because I'm putting more importance on the things that I deserve than my future. But I needed to learn from somebody else, somebody who's more experienced than me, somebody who did it right. So I decided to look into mentors in books, in resources like YouTube, in resources available online regarding personal finance and money management. And one of the first books that I encountered was Robert Kiyosaki's Rich Dad, Poor Dad, where I encountered the name for the cycle that I was in. This is actually called the rat race. And there's nothing wrong with being in the rat race. Everybody gets into this sometimes. Actually, not sometimes, all the time. We all have to begin working hard somewhere. But in reality, nobody really teaches us how to get away from the rat race and how to go to the finish line. Because in schools, we were taught how to work for money. But did you know that your money can work for you? Ayan. So, your money can work for you. Yes, that's true. And I heard si Antoinette when she was doing her panel kanina, she looks at her money like people and she sends her money to work. And this is done through saving and investing. Now, saving, you're probably familiar with saving in the form of your piggy banks and with your bank accounts, but let's define saving so that we'll know what kind of needs we're dealing with. So saving is a portion of your income not spent on current expenditures. So here you would see that you prioritize your expenses first in this equation. So it's income minus expenses equals saving. So is there a better way to look at this? Because in this equation, savings becomes an afterthought and not a priority. I'll answer you that yes, there's a better way to look at this by switching the equation a little bit. So if you move the variables around, income minus savings now become your expenses. You prioritize your savings. Savings now become money set aside for future use and not spent immediately. Using this equation, you put yourself in a better position to pay yourself first. And savings then becomes a reward your future self will thank you for. But if you're like me, who started out, not really into savings and investing, you would say, yeah, I know savings is important, but how do I really get into it? Okay. So with that, I'll give you the 50-30-20 rule. Now, this rule isn't hard and fast. It's actually a simple guide for you to understand how you can put purpose in your money, because money making for you and me will be a big part of our lives. And when there's purpose in your money, money making becomes more meaningful. So now the 50-30-20 in the 50-30-20 rule are percentages. It's 50%, 30%, and 20% of the income that you get. Now, looking at and taking into consideration the equation that we said earlier, we'll start with savings. So where do you think savings counts here? Sa 50% ba? Sa 30% ba? Or sa 20%? Okay. savings is actually just into the 20%. By the way, guys, if you have questions throughout this talk, you can just type them in the VFairs chat box so that we'll be able to pick them up and then we'll answer them later. All right. So going back, your savings account for 20% of your income because savings can help you achieve your short-term goals and your long-term foreseeable goals. And on top of that, you would see the 30% here is suggested to fulfill your wants. Looking at this 30%, it's bigger than 20%. Why? Because this rule isn't really restrictive. You also have to enjoy the fruits of your labor. And this rule will allow you to enjoy the fruits of your labor responsibly. You enjoy the now, but you can enjoy it worry-free because you've already allocated the 20% for your future. And now, what do you think is allocated for the 50%? We'll go back to your Psych 101, which is their Maslow's hierarchy of needs. So in this hierarchy of needs, the bottom of the pyramid is your physiological needs and safety needs. Basically, these are your essentials. And with the 50-30-20 rule, your 50% will also account for your money to meet your needs. And with this one, your income, you can actually take it not just from your salary, but also from your allowance, your stipend, your side hustle. You don't have to be a working student to be able to practice this. And it doesn't even have to be just 20% outright. What we're after here is you will be able to build the habit of saving and setting aside money for your future use and for your future self to thank you for. But the next question here is, now we have everything, your essentials, your needs at 50%, your wants at 30%. But where does investing fit into all this? All right. So investing actually is in the 20%. And what do investments mean exactly? When you invest, Forbes defines this process as the buying of assets that increase in value over time and that will provide you profit in terms of income payments or capital gains. But here I have a question for you and I will wait for your responses, okay? What do you think is the more important resource between the two? Your assets or your time? Your most important resource will be time. And Peter Lynch summarizes it best that in the long run, it's not just how much money you make that will determine your future prosperity, but it's how much of that money you put to work by saving and investing it. And if you don't believe me, here we'll talk about the numbers and I'll share with you the power of compounding. And actually, this was talked about earlier in the panel, but it's compounding interest. There is also a sense of compounding your earnings. And this is pictured out in this chart with the investing throughout the years. So given this illustration, we have Juan. Juan is trying to contemplate when he should start investing and at what amount. So he's thinking about scenario A, investing at 20 with 1,000 pesos a month until age 65, assuming that the interest rate, that the annual interest rate he'll be getting is at 8%. So with that, Juan is also considering another scenario. He's thinking that maybe I need to be more financially stable so that I'll be able to invest freely. I'll just put in more money, but I'll start at a later time. So Juan is also considering investing 5,000 pesos at age 40. Now let's see the numbers. If you start investing at age 20 with 1,000 monthly continuously until age 65, assuming interest is at 8%, your total growth of your money would be 5 million pesos at the age 65. However, if you start investing at 40, even if with a bigger capital at 5,000, your total investment at age 65 will only be amount to 4 million pesos. Now, if you are Juan, what would you choose? Start to invest at 20 with 1,000 or start to invest at 40 with 5,000? It's up to you. But Jim Rohn summarizes it best that time is more valuable than money because you can get more money, but you cannot get more time. And just to share with you, with the savings account, you can actually earn a bit of money, but it's only at 1% per annum. Savings alone then, this chart shows you, is not enough. And regular savings will only allow you to reach as much. But what if there's a way to earn more than 8%? And this is the compounded annual growth rate over 20 years. If there's a way to earn more than 8%, would you take it? This instrument is the stock market. The stock market can help you potentially earn from 9% to 15% at best. And are you interested in looking into this? Of course you are. That's why you're here in this talk. So let's go and dive in deeper to what the stock market is in a nutshell, of course. Let's define some terms first. So what is a stock? A stock represents a portion of ownership in a company or several companies. Now, with a stock, you can imagine a pie. And the pie is a company. The pie is a stock. Now, shares, on the other hand, is a slice. And a more technical definition would be a share represents a single unit of ownership in a company. And here you will see owning a stock is the cheapest way to become a part owner of the company. And part owners can benefit from a company's earnings via dividends or capital appreciation. But we'll get to that later because we have to define what is the stock market? This is the real big question, right? So the stock market is a place where stocks are bought and sold. And with the stock exchange, this connects buyers and sellers by helping them trade stocks. This is facilitated through listing stocks, processing payments, tracking price, and sales data. And globally, there are 60 major exchanges, but today we will focus on the Philippine Stock Exchange. Now, for our context, the PSE oversees 125 brokers, 33 of them are online, who help facilitate the buying and selling of over 250 listed companies for individual investors like you and me. Now, investors can only trade stocks that are listed in an exchange through an accredited brokerage that handles the actual mechanics of trading for them. All right, to be part of an exchange, a company will have to do an initial public offering or an IPO. And companies do IPOs to raise capital. Yeah. After the IPO, the company now becomes a listed company. And now the exchange has identified the top 30 largest liquid listed companies to act as a benchmark representing the general movement of the market. And this is known as the Philippine Stock Exchange Index or the PSEI. And once a company is listed, the funds that they have raised during the IPO can be used for expansion, product improvement, or debt payment. It depends on the purpose of the company, why they decided to go public. And for funds, expansion can be like a company wants to build a new branch. For product improvement, the company wants to improve an existing product line or create another product line. And for debt payment, of course, as you can see, companies also get into debt. And this is something that everybody encounters at some point in time. But for you, how can you start trading? So individual investors like you and me need to register with a trusted brokerage who will act as middlemen to facilitate our buying and selling of stocks in the exchange. And transactions like this happen from 9:30 a.m. to 3 o'clock every Monday to Friday. Now, of course, the big question is, what's in it for you, right? There are two ways you can earn from your stocks. First is through dividends, and then the next one is through capital appreciation. But first, we'll tackle dividends. And the most common dividend is cash dividend. And dividends are a portion of the company's income that is given to shareholders. And for cash dividends, there are two types. So there's the regular cash dividend and the special cash dividend. Now, you can differentiate between the two with the frequency and the source. For the regular cash dividend, it's given in a regular interval. So it's either annually, semi-annually, or quarterly. And the source of this is the percentage of the earnings of a company at a certain period of time. On the other hand, a special cash dividend, it varies. It doesn't have a fixed timeline, and the source of this is the surplus cash of a company's earning at a certain period of time as well. So now we talk about capital appreciation, and this is, I guess, one of the most common ways people also earn in the stock market, because capital appreciation happens when the share price of the stock increases. And a good example of this is one recommendation call that our research team made last year. We recommended a buy at SCC when the price was still at 19 pesos, and it reached our target price of 22 pesos in just 2 days. If you bought 1,000 shares of SCC, that's a 3,000 peso profit in just 2 days. Sounds good, right? But is that all? What's the catch then? Every time people offer you something, you have to also check what are the risks, what's the catch. If it sounds too good to be true, you have to be wary as well. And I am here to be transparent with you that the market isn't all a bed of roses. You are also being able to encounter risks. And the risks here that I've identified is that the market is cyclical, and you can be your own enemy when you're investing in the market. And the third is you have to find the right partner to be able to succeed. And with the market being cyclical, I will highlight 2 seasons. The market, like life, has its ups and downs. And these seasons are called the bull and the bear. So like a charging bull that uses its horns, a bull market has an upward pull on the price. So there's a general optimism going on where everybody thinks they're right and nothing can go wrong. Whereas when the bear market comes, like how a bear strikes down its prey, the bear market has a downward pull. And this is the time when everybody is fearful and doom and gloom seems to be everywhere. If that sounds familiar, that's kind of where we are in the market today. But as an investor, that's not all that you're experiencing. You are also going to experience the emotional cycle of investing. Now, when the bull rises to the peak of the curve, all the positive emotions are there: relief, thrill, euphoria. But when the bear market falls and down the valley, you'll be able to experience all the negative emotions, from anxiety, denial, panic, despondence, and depression. However, note that on the highest of highs here, that's where you're at the highest risk of losing. But also on the lowest of lows here, you are at the highest potential of earning. So when the market moves after the fall, you'll be in the bull rise again, and the emotional cycle continues. So how do we deal with this? You have to know what kind of investor are you. And with investing, it comes with choices. And the choices you make are based on who you are as an investor. And this is called your investor profile. It's made up of 4 main themes: duration, return, liquidity, and risk. As an investor, you make trade-offs between these themes, and these trade-offs tell you which kind of investment is best for you. Now, here are the 4 themes and the 4 questions that you should ask yourself to determine what kind of investor you are. So first, for duration, for how long am I willing to wait for a certain goal? For instance, you are willing to wait for 2 years to build your vacation fund, but you are willing to wait 30 years to build your retirement fund. So you have to have a set timeline so that you can set the expectations and begin with the end in mind. So that when the market sways, you won't be swayed around with it. Next is you have to think about what kind of return am I most interested in? Does a high risk, high reward investment sound good to me? Or am I more of a steady, reliable income type of investor? Next is you have to check how much of my money do I need to have available quickly? How much of my money invested do I need to have available quickly? Because when you're investing, the assumption is you already have savings for your future. So you have to ask, do I have an emergency fund ready so I won't pull out my investments prematurely? Kaya nga, we talked about for how long am I willing to wait, because this is the duration, the time duration that you have to set in your mind and in your heart that, okay, I'm gonna set my money aside for this period of time and I won't touch it so that I'll be able to reach this kind of return. Now, if you're not liquid, that might not be a good result for you, because then you will have to pull out your funds prematurely ahead of the duration that you set initially. So that's why when we talked about savings and investing, we talked about savings first, because you have to have your essentials met before you are able to invest with peace of mind. And lastly, the reason why we're being transparent with you like this, because the stock market is a high risk, high reward type of investment. And when you talk about risk, you are asking yourself, do I want the chance to make more money if it also means I may lose more? And all right. So when you make a low risk investment, you generally know how much you are going to receive. For example, with a term deposit, you already know the interest rate in advance. So you know that at the end of a certain period, this is how much your money would grow for you. But higher risk also means you may not get what you expected. And there are two full spectrums for higher risk investments. You can either get exceedingly more than what you asked for or imagine, but also you can get exceedingly less, and you can also be wiped out if you are not careful. And the question that you have to ask yourself with is, how comfortable am I to lose more money for the chance of gaining more? Yeah. With that, then, all those four questions, you have to ask that for yourself, because everybody will have a different appetite for risk. You can either be an aggressive investor who's into high risk, high reward types of investing, or a conservative investor which is into low risk, low reward type of investing. But for beginners, you can be in the moderate, especially because you're young. You can have a mix of both high risk, high reward, and low risk, low reward type of investments. After reflecting on those questions, I am confident that you'll be able to know who you are as an investor. Why? Because that will help you be equipped during the roller coaster of emotions that you will experience as you continue investing in the long term. And that will help remind yourself when you hit your low point to remember who you are and keep going. Why do we tell you to keep going? Because here, I'll show you. If you look at the bigger picture, the lows of the market are temporary. This is the historical performance of the Philippine Stock Exchange Index from inception up to 2022 today. And the market is trending upwards, and the potential of growth is always there. Now, the next question is, how do you grow from potentially growing 9% per annum to up to 15% per annum? The secret is in choosing the right partner. Yan. So to invest is a commitment, and the stock market is not for flings. The right partner will then be dependable and reliable, and no ghosting will happen, especially for my trade, because we are available in your mobile app, in your desktop, and also on your tablet. When times are rough, we have a 99.9% uptime. Also, the right partner also communicates well. Your investment partner should be able to communicate both the good and the bad in a timely manner. Our in-house experts give you regular, ahead of the curve, and fundamentally sound research updates that come in the form of our daily news and our daily short takes. But when there's a hot topic, we even provide an in-depth analysis for specific stocks in the form of our action idea report. But for those of you who are technically inclined, we have a weekly super timer report to help you time the price action of the market. All right. It's with these tools that our clients are able to experience a potential 15% growth rate in their investments. And our expert team of research is led by Sir Nicky Franco, who was coined as Forbes' best stock picker in the early 2000s. And then Lawrence Gonzaga, Philippines' first chartered market technician, also in-house for our super timer. Lastly, the right partner will help you grow, and enabling our clients to grow in the market is a big part of why we do what we do. So we offer 2 products to help people get started in the market. Now, for students, this is what we recommend. This is especially for beginners, newbies, students, and conservatives, because the Marge or the My Trade Affordable Retirement Guide will help you identify which stocks to buy, hold, or sell from our monthly playlist. We send a monthly playlist to those who are enrolled in the Marge accounts so that they will be able to invest stress-free. Unlike when you invest through our other account, which is the Navigator, this is designed for active and seasoned traders. So we're actually guiding you from your beginning to when you are active already and you're seasoned, because the Navigator here, we have an interactive stock picking tool that marries the fundamental and technical analysis part of our research team. So with the interactive stock picking tool, it lists all of the stocks that our research teams recommend, the recommendation, and there are also technical guides on what you need to do for your price. If what price do you need to enter into that specific stock? And the starting capital here is 10,000 pesos. So when you've already grown from your March account, we have the Navigator here, ready in waiting to help you in your next stage for investing. But when the going gets tough, we also give you the proper support. And our support systems are active in our FB groups called the My Trade Map and our Mighty community. Our in-house experts, our research team are always there and ready to give you the help that you might need so that you will be able to be present in the moments that matter. All right. So if this sounds good for you, these are the things that you will need to remember to how to open an account. You just need to prepare your university ID and your proof of mailing address and open an account through this link. So it's https://start.mytrade.com.ph. But if you're below 18, you will need to enlist the help of an adult so you can open an interest for account. So the adult will open an account on your behalf and they will just submit your birth certificate. So they will be able to help you get into the market even while you're still a minor. All right. So this is about everything. And I would like to leave you with this quote: time is gold, and you should start with the right trading partner today. That's all we have for our time today. If you have more questions, if you can kindly please visit our booth and follow us in our social media pages here. I will be happy to answer your questions in our booth if we still have the time for today. I'll see you there.